see is that maybe the Fed adds some condition on when to end or when to start the tapering. Right now we have the inflation target and we have the unemployment rate target. Maybe the Fed could add a couple of more indicators to clearly make sure that the tapering will not start immediately after the summer. I think this is, it works. Look at what we have with the ECB, so send out clear guidance at what time the Fed thinks tapering could start.
Okay, but wouldn't adding more indicators make it even more complicated and uncertain for investors? I mean, surely they want to simplify it, not complicate it.
And that's the whole thing. What they could also do is clearly say, listen, we're having an unemployment rate right now of 7.6%. Do not think that you can extrapolate the improvement of the labor market that we've seen over the last couple of months. So that reaching these 6.5% that the Fed announced being the trigger to stop or to start the tapering is still far off. I think this could also be a message clearly saying, okay, listen, guys, this is still way off, so we have to wait until the end of the year and not already September.
Okay, would you agree though that the last few weeks especially, the Fed's communication has been, let's be frank, quite poor, and do you think, has that in any way damaged the credibility of the Fed?
No, I don't. Yes, the communication has clearly led to fluctuation on financial markets. Has it damaged the credibility of the Fed? No, I don't think so. This is something that can easily be corrected tonight or in the coming days and weeks. I think it needs more to really damage the credibility of the Fed.
Okay, here in Europe we had some news yesterday that the long and winding road towards Eurozone banking union may get even longer and even more winding. Some of the stuff on the single supervisory mechanism is delayed even further. And this was meant to be the easy part of the whole process.
Now, obviously, the single supervisory mechanism was actually the easiest part of the three-pillared banking union, combined with the bank resolution mechanism and some kind of deposit guarantee scheme. Already the fact now that it takes so long to just agree and to get the single supervisory mechanism going clearly shows, I think, that the banking union hopefully comes in time to prevent the next crisis, but it's obviously not in time to do anything about the current crisis.
Okay, and just to finish up, I was speaking with an FX analyst yesterday, and he said, you know, the last few weeks there's been no real news, no new news on the Eurozone crisis, and in that time the Euro has quietly, steadily crept up to a 3-month high of 134.
No, that's really the funny or the irony of the story right now, that of course we do see some tender signs of stabilization in the Eurozone, but I think really based on the fundamentals there is no reason to justify the strengthening of the euro exchange rate right now. If this trend would continue, obviously actually a strong euro could become a risk to this fragile stabilization of the economy in the Eurozone.